So moving on to the third subject, our Treasury Reserve policy. We're pleased with the market reaction and our investors' reaction to our strategy. We were aware that we were pioneers in this particular process, and that there's a lot of uncertainty going into this initiative. But nonetheless, we thought it's the right thing to do, and it's the best thing long-term for our shareholders and for all the rest of our constituents. We are starting to see marketing benefits to the overall company. We've activated Twitter as a communication channel, and we've activated YouTube as a communication channel. We built our Twitter and YouTube presence, and I believe that our brand and our channels communication via cyberspace are going to continue to strengthen over time. This should accrete as a benefit to the MicroStrategy's brand, to the MicroStrategy Corporation. It should help us draw new people to be interested in our value proposition, our offering. I think it helps us with recruiting. It helps us with marketing. It helps us with our partners, our employees, our customers, and with our investor relations. It's easier to reach larger constituencies. I think it's clearly helpful that Bitcoin is becoming more mainstream in the year 2020. Since we began the year, we've seen support for Bitcoin coming from Fidelity, from hedge funds like Paul Tudor Jones. Now we're seeing comments and coverage from Bloomberg and from JP Morgan. The support that's come from Square to build Bitcoin and to promote, to take Bitcoin on the balance sheet was a big deal. I think Square's selling of Bitcoin and supporting the Square Cash application is a big deal. Now that PayPal has announced that they're going to do it in the PayPal app, I think that's legitimizing. When PayPal delivers that in Venmo next year, I think that'll be a big plus. What I have said on a number of occasions is Bitcoin is digital gold. I don't think people really understand completely what we mean by that, and I think it bears mention right now that if you virtualize gold, if you take the theoretical safe haven asset of gold, and if you virtualize it, and you take the mass out of it, and then you put it on an open protocol, and you make it possible to program it, then the fact that it's programmable gold or a programmable asset means that it is going to be smarter, it is going to be faster, it is going to be stronger, it is going to be harder than the physical version of itself. In the same way that Google Maps is a smarter, faster, stronger map than a Rand McNally printed atlas, and in the same way that a camera on an iPhone is smarter, faster, stronger than the camera that you had to carry around in your hand, I think in that way, virtual gold or Bitcoin is smarter, faster, stronger than a bar of actual gold. And what it means is banks are going to be able to program it into their banking offerings, and consumer mobile apps like PayPal and Square are going to be able to program it into the handset. And it means that over time, as software gets better and as hardware gets better and as human beings get more innovative, it's going to get better. And that's the fundamental principle. I personally believe Bitcoin it represents the first example of a digital monetary network. It's a software network that is capable of storing and channeling monetary energy. And if you compare that to what Facebook was, which is a digital social network, a software network to store and channel social energy, you see it's a profoundly new idea. Nobody understood Facebook. They couldn't conceive of the idea of channeling the social energy of 1 billion people until after it was done. Today, I think we all understand the power of collecting the social energy of 1 billion people on a single software network and channeling it. I think in time, people will start to understand the power of collecting the monetary energy of 1 billion individuals or thousands of corporations or banks or billionaires or high net worth individuals or governments. If we can collect that monetary energy onto a software network and store it and channel it, it becomes something altogether more exciting than just a bar of gold or a virtual bar of gold or a digital only bar of gold. It becomes a monetary network. And it's a monetary network, a digital monetary network that doesn't bleed monetary energy. monetary energy is the superset of all energies: kinetic energy, electrical energy, nuclear energy, chemical energy of sorts. All of these energies eventually roll into monetary energy. I can use money to buy any of them, and I can trade any of them for money. So as we actually pull monetary energy, the number one problem is it bleeds if it's stored in other types of assets. If I put my monetary energy in gold and gold miners produce more gold, then as they increase the gold supply, you lose some of that energy. If I put the energy in a battery, you lose 2% a month in a battery. If I put that energy into cash or fiat currency and the central bank expands the monetary supply, the energy content per unit of cash decreases. So the significance of Bitcoin is it's a fixed supply. The energy is not depleting over time. And the idea of being able to store monetary energy for long periods of time without having it depleted is the big idea. And as more entities start to understand that idea, which is a pretty compelling one, I think that the adoption of Bitcoin will increase. And as the adoption of Bitcoin increases, I think it will be beneficial to all those that chose to adopt Bitcoin as an energy network in order to preserve their monetary energy over time. And that's, in essence, what the company is thinking about, as we adopt Bitcoin for our treasury reserve.